Welcome, and thank you for tuning in to the American Investor Show. Please click subscribe if this is your first time listening. From trader and CEO interviews to breaking news about companies you won't hear anywhere else, nobody does a better job at keeping you in the know when it comes to penny stocks. The term penny stock generally refers to a security issued by a very small company that trades at less than $5 per share. Penny stocks are extremely risky, yet they offer rates of return on investment not seen anywhere else. The host, guest, and callers are not registered financial advisors licensed by any government entity, and therefore, the following should be considered entertainment. The host, guest, and callers disclaim all liability in the event any information, commentary, analysis, opinions, advice, and/or recommendations prove to be inaccurate, incomplete, or unreliable, or result in any investment losses. Before investing in penny stocks, you should consult a professional to determine what strategy may be best for your individual needs. Now, without further ado, your host, LaSalle Anungu.
Yes. What's going on, ladies and gentlemen? Back in the building, ladies and gentlemen, for Sunday show. I'm like an hour and a half late, and I know motherfuckers have gone to sleep. Really got to start getting in here on time, but shit just comes up, man. But I'm going to make sure we knock out the show here and make it really informative. Shout out to everybody joining me, and more importantly, shout out to the people who are watching this in the future and wondering why the hell did not come on time when they were expecting me. So I'm in the building, ladies and gentlemen. Shout out to everybody in the chat room right now who's going to join us. We're going to make this quick. I know most of you guys are going to work tomorrow, so we going to knock it out. We going to knock this out. Shout out to Mr. Cool Millie, Poker Pro. What's good, man? Greeting from the hospital bed. What happened? Appendectomy. Okay. All right. Get better, man. Get better. Yes, indeed. Ryan gets it. Smooth Hype. Adam Gergis. Appreciate you, man. Your long defense stocks. There's nothing wrong with that. I think, that's actually what we're talking about, right? I mean, we're talking about military stocks today. And I just kind of want to go over the large cap military stocks. Those are the ones that, if we end up in a situation of conflict with Iran, we can definitely see a situation where some of these stocks we'll talk about will, in fact, go through a serious inflow of capital from traders looking to profit off a unfortunate situation. And war has always been one of those things that's kind of tricky for me because I think there's just something almost a bit disgusting about it. Buying stocks in military, in military companies profiting from death, right? I mean, but at the end of the day, you can't get emotional about stocks, right? The movie Wall Street, 1986, is a classic Martin Sheen movie, Michael Douglas. So, we got to, unfortunately, go where the profit is. You got to go where the profit is. And we need to also understand that military spending, and doing research for the show, military spending is actually a very important part of government. In fact, there's a word for it. It's called military Keynesianism. Military Keynesianism. I had never heard it. I had definitely heard of Keynesian economics, right? Keynesian economics is basically what got us out of the Depression. This idea that when things aren't going well, all right, the idea that when things aren't going well, that you cut interest rates or you cut the cost of capital, right? And that you cut the cost of capital to hopefully improve the aggregate demand, to improve people's ability to spend and to generate economic to generate economic growth, to encourage consumerism, to encourage production. That's, in the end, Keynesian economics. Right now, we're on Keynesian economics on steroids, because Keynesian economics actually talks about only cutting the cost of capital when you have significant declines in unemployment. That's really the only time he talks about implementing the strategy of Keynesian economics. All right, again, based on the fundamental theories and ideas of John Maynard Keynes, 1883 to 1946. All right. And then, of course, again, we got the idea of military Keynesianism. And that idea is basically that the government should consistently raise military spending in order to produce economic growth. All right. Because we understand the arms industry in America today to be privatized. All right. To be privatized. So looking at the arms industry as a way to encourage economic growth by pumping, billions of dollars into the arms industry, but that produces, or a side effect of that is what you would then create, which is called the permanent war economy. All right. And the idea of the permanent war economy started back in 1944. And then really kind of the beginning of the privatization. No, I'm not saying that right. Where, individual investors and entrepreneurs get together to create weapons and ideas for the military and get paid for it. But basically, he argued that after World War II, we would see the creation of a post-war arms race. And he predicted accurately that the United States would then, from then on, retain its character and become a permanent war economy, even in peacetime. That U.S. military expenditure would remain large. And of course, we would then understand this as a way to reduce unemployment. All right. He updated his theory in 1951, but basically his ideas still stand. His ideas still to this day stand. Right. And many of these companies will briefly talk about, again, I haven't looked at their books. You're going to have to look at it, but, billions of dollars in cash. And all of these are large caps I'll bring today. Obviously, there is quite a few mid caps, tons of small cap companies, each with their own individual contracts, small and large, with the federal government participating in, again, what we call the arms industry. When we come and talk about the United States and our arms industry, we need to understand that we are the number one arms exporter in the world. Nobody comes close to the United States in terms of arms, and it's our export of military weapons. All right. Of the top 5 are U.S.-based companies. Raytheon is part of that. Boeing is part of that. UTX, another stock we'll briefly discuss, too, is part of that. In fact, Raytheon and UTX, United Technologies, are actually merging. A lot of people are trying to fight that right now. All right, a lot of people are trying to fight that right now. These are all very, very liquid, by the way, very liquid stocks. All right. So 5 out of the 6 are U.S. companies. BAE, British company, which is basically, again, an allied-based company. All right. So huge. Yes. Lockheed Martin. There we go. Lockheed Martin's part of that. I think Lockheed Martin was like number 2. So all of these are stocks that you need to know, you need to be aware of if something like this were to happen. Obviously, I never, as a veteran of the United States military, I never, ever would ever want us to see, friends that I know are in there trying to do their 20. God bless their heart. Woo! Boy, 4, and it was just like, I'm out of there. Get me the fuck out of here. But guys are trying to go for their 20, and I don't blame them. Get that check, whatever it is now. I think it's like $1,800 or whatever it is, $2,200, whatever it is a month. Check for the rest of your life. God bless your heart. God bless your heart. Yeah, so we're going to talk about that. And, of course, we're going to talk about your tickers. What are we going to look forward to this week? I'm really going to be interested in seeing the PMI number tomorrow. That's going to be very, very interesting. You guys know the PMI number comes out twice a month. For those of you guys who don't know what that is the Purchase Managers Index, and basically it manages the activity level of purchasing managers in the manufacturing sector, right? A reading above 50 indicates expansion. A reading below 50 indicates contraction, right? And it's a very, very, very bad sign to see readings below 50. And ladies and gentlemen, I'm going to show you here the trend hasn't been very, very healthy for us. All right, so it's going back now to August of 2018. Let me boost this up so people can see. The trend hasn't been very healthy, right? And this is just another one of the many, many signs that, economists are looking at, pajama traders like myself are looking at, and saying, hey, things aren't going well for us. It's not just a global slowdown. It's us here in the States, because these are U.S.-based manufacturing companies participating in this survey. And it's very clear that the trend looks lower. And I don't expect a very nice number tomorrow. Now, yes, guys are showing, hey, look, after hours, or pre-market right now, the number is awesome, right? I mean, we're up huge on Trump's deal with China. No more tariffs. And by the way, we're going to talk about that too, because it looks like the word was out on Friday that deal was going down. And if you look at the SPY chart in the close, looks like some guys already had got the word that was going down this weekend. We'll talk a little bit about that in a minute. But as you can see here, the trend doesn't look very, very good, right? Going lower. Let's go and see the numbers for ourselves. You saw the graphical just now. Here are the numbers. And you can see here, trending lower since January. All right, trending lower since January. Again, comes out twice a month. Twice a month, this number comes down, and we're going down. I mean, it's clearly going down. Yet the market continues to go higher, right? Into the market continues to go higher. So something's not going on here, and this adjustment, and this could be really, really ugly when this all comes to fruition. When the numbers get to a point where they just can't be denied anymore. Because right now they're being denied. Let's just be honest about it. All right? So we're going to be seeing where that number comes in at tomorrow. And we already got the number for China this morning, because they do a very similar thing where they put out their PMI number as well. We already got the number for China this morning, and it wasn't very pretty. All right, it wasn't very, very pretty. And if I can put out that article, let's see if I can find it here about the China PMI number. We already had an article that came out. Okay, great. And this doesn't want to show up for me. But it wasn't pretty. In fact, the article says, private survey of China's factory activity in June shows lowest reading since January. All right, lowest reading since January. So China's already been struggling quite significantly. Shout out to everybody in the chat room. What's going on, guys? Appreciate you, M1 Gunner, Felix Sapini, Jeff Thayer, Mina Marine. What's going on? Javier Mosby, appreciate you, man. Eban R. Shout out to all of you guys. So, look, the media doesn't want to tell you the truth about what's going on here with our economy, but I'm going to tell you the truth. And I'm fighting my hardest not to buy weekly calls, because that's been the strategy. All right, that's been the strategy. And man, because I know as soon as I buy them, it's going to fall apart. Because the last time I did that, October, November 2018 happened. So when I get to the point where I go out and I say I'm going to buy a call option, oh, fuck. That's when that's the fucking top. I mean, because I can't buy calls to save my fucking life, man. Irregardless of my strategy. The moment I buy a call, that's going to be a red day. You know what I'm saying? Sometimes you just have that kind of luck and say, you know what? If that's what it's going to be for me, you know what? I'm just going to be short. Every fucking day, everything I do, I'm just going to be short, because that's where I win. Because as soon as I buy a fucking call, So again, let's pay attention to the PMI tomorrow. That's going to be really interesting. There are more than enough articles out there to show you that after the G20, we actually do get a G20 sell-off. So it's really interesting to see if that's going to follow through tomorrow, this week, a G20 sell-off. But I saw that on Twitter, and yes, when I looked up the dates that we had G20 meetings, you do see sell-offs in the market during that time. So it's going to be interesting to see what happens. But I have no doubt that call buyers are going to be dumping in the morning, all right, because that PMI is not going to be looking very good. Interestingly enough, that PMI number, guess what time it comes out? 9:45. These guys, they give them the time to sell. I mean, it comes out at 9:45, so you got 15 minutes to dump your shit and run. All right, so this is the SPY going into the close. All right, and this was really interesting because, you know, Friday was pretty much a sideways day, right? Shout out to all the guys who have black box in here. There was basically nothing going on. Thursday and Friday was like, you could have slept throughout the whole day. The algos pretty much didn't have anything to show for it for the most part. There was really nothing going on. And then all of a sudden, everything went crazy toward the last 15 minutes of the day. Nobody really knew what was going on. There was no news. There was no, I mean, nobody really knew. Everybody knew about the G20 meeting. I mean, everybody, you know, that's been planned for the last 4 months. So everybody knew that was coming. So where was all this buying volume, and why was it happening in the last, 15 minutes of the day? Nobody knows. Nobody really knows. And then come to find out, 5 hours, which actually was 2 hours before the beginning of the futures market opening, boom. Dow futures surge 150 points after Trump and Z agreed not to impose more tariffs. So these guys just all of a sudden agree to, and then of course the futures market goes crazy, and the guys who came in at the close, they could be up millions. They could be up millions of dollars on this deal, and they're going to sell to the FOMO traders in the morning. There was no reason for that spike at all on Friday, at all. So there it is, folks. That's the game we play, and that's why I've told guys that you think penny stocks are manipulated. This is a whole different. There's more manipulation here than you could ever imagine on penny stocks. Bigger numbers, but the same slimy, disgusting, lying. It's horrible. Somebody said Trump was the buyer. They would have got his ass up out of there if they find out he was buying stocks right now. Can you imagine what would happen if people found out this guy had a trading account? He was trading against his decisions while in the White House. Man, they would come after him with no mercy, man. But I have no doubt that there are people within the White House who are trading. Oh, no doubt. I have no doubt that there are people in the White House who are taking positions through family and friends. Oh, yes. No doubt about it. I don't doubt it at all. I don't doubt it at all. Okay? So let's just go through these large caps really quickly. Most of them you know, some of them you don't. All right. First and foremost, we got to start with the world's largest aerospace company, which, by the way, is it's not sitting pretty right now. I wouldn't even consider it right now for long, but for the purposes of this video, we got to talk about them. I'm going to use the weekly chart. Boeing, right? BA. Right now, they are swamped with legal dealings and mess regarding the 787 MAX 8. Horrible plane. Now the feds are looking into their manufacturing center somewhere down there in the south. So things like that is just going really, really bad. Little divergence there starting with that RSI. But again, as you can see here, RSI trapping itself under that 770 RSI level, really getting under that 60. So you should be able to see a breakdown here soon, which is going to look really, really ugly unless they get out of that 60 RSI level. We talked about that in the video, how to trade RSI the right way. So look at my video about that and how that could be a real sign when you have RSI has, having an inability to get to those higher levels, eventually ends in a very, very ugly breakdown. All right. But Boeing, world's largest aerospace company, no doubt about it. Second after that on some of my lists was General Dynamics. General Dynamics, jet aircraft contracts with the U.S. military, including U.S. Navy. They do everything from combat vehicles, communication systems, cybersecurity. They're a huge infrastructure in terms of cybersecurity. They also part of mission support services, everything from munitions, shipbuilding, and also submarine weapon systems. So all inclusive of General Dynamics. And reading to some of the jobs that these guys do, I mean, if you're one of these guys who come out of the military with top secret clearance, I mean, these guys at General Dynamics go after you with a vengeance, and you can make pretty good money with that top secret clearance working for General Dynamics on the civilian side. All right, so General Dynamics, definitely one of the companies you want to take a look at here. And again, this is the weekly chart, holding it in pretty well here on the chart. But again, another company that's kind of struggling to make new highs, right? Looking like they're trying to tap that 60. Let's see if they tap it. Obviously, if it bounces down, then here's the opportunity for the short if they don't make that happen. But General Dynamics, one to watch. Harris Corporation. Harris Corporation, this is also military and commercial applications for their weaponry, communications and information systems. Tactical radios is their big thing. They also produce network solutions for air traffic control as well. So HRS is the ticker. And in the comments of this video, I'll make sure I write those tickers down as well for guys who are watching in the future. All right. HON, Honeywell International. Honeywell International. This is a really nice one, man, because it's got a very low PE, heavy cash, $127 billion. I mean, this is probably one of the most financially stable of all the ones that I pulled up. I mean, very, very little debt. Honeywell International. And by the way, this has got, a lot of consumer side products too that they have as well. I mean, everything from like toasters and all type of bullshit. So Honeywell International, conglomerate with a lot of mixed products, but also exposure to aerospace and commercial and military markets, turbochargers, performance materials, things I didn't even know that they were in the business of being in. Another ticker I didn't know so well, L3 Technologies. LLL is the ticker. This has been a monster trade, man, for the last 7 years here. Incredible run. I mean, this is so typical of a lot of your blue chips these days. Huge company. I mean, 31,000 employees, but not many people know about this company. But again, it's been a winner on the earnings side. Huge contracts with the U.S. military. This one also communications and electronic systems. LMT, Lockheed Martin. I mean, no introduction, necessary here. If you're in the Army, there's more than likely you've worked with a Lockheed Martin product, because many of their products do find themselves in the Army as well as the Marines, I believe, too, as well. Some of the stuff that I looked at. So they got a ton of joint light tactical vehicles that they produce for the U.S. military and our allies, naval systems, PAC-3 missiles, whatever those are, satellites, also commercial and government satellites, by the way. Also have a part to play in space launch in association with, what's this guy's name from Tesla? But his SpaceX product or company, they got something together with Lockheed Martin. I had no idea about that, but Lockheed Martin got their fingers in that situation as well, too, with SpaceX. So missile systems, training, tactical aircraft, as well as terminal high altitude defense systems. So they're also in air defense as well. All right. Huge player right here, Northrop Grumman. Northrop Grumman, again, very, very familiar with this company. Again, if you've worked in the military, a lot of veterans go to work for them. Again, this is another company. Top secret clearance, go get yourself a paycheck with these guys. And, a lot of your generals, a lot of your lieutenants who basically, realized that they weren't going to go too much further in the service. If they've got, a decent clearance, they end up with companies like Northrop Grumman and General Dynamics and many of these other players too on the civilian side. All right. So these are definitely companies to be aware of. Just a couple more. And Northrop Grumman, by the way, cybersecurity, huge cybersecurity, also play a role in command and control communications, intelligence, logistics, reconnaissance, strike aircraft, and unmanned systems. Unmanned systems. In fact, they've got quite a few drones that they have in service with the United States military and are constantly producing new models. All right, and you can, in fact, go to their website and learn more about those as well. Raytheon, I mentioned that slightly earlier in the show, RTN. This is another interesting company. Cybersecurity, missile systems, space and airborne systems. They also produce as well. They're right now in a merger attempt with UTX, which is United Technologies, and which United Technology does aircraft engines, helicopters, HVAC, and other industrial-sized products. But right now, you've got an activist investor who's trying to stop the deal from going through. All right, and actually quite a few of them, a guy by the name of Dan Loeb, and billionaire who's trying to get in between that deal, and quite a few articles on that as well. So RTN and then UTX, and basically what they're trying to do is create an aerospace titan to be able to compete with the Boeings and Lockheed Martins of the world. So they're trying to come together and be more competitive together than separate. All right, so a couple more here to go. Texatron didn't get enough opportunity to research this one. This is one actually with a smaller companies, $12 billion company, so almost a tenth of the size of what we just talked about, Lockheed Martin. So much smaller company. Now they make display as well as surveillance systems, flight deck avionics, mission communications and navigation, as well as simulation and training solutions. So much smaller company, very low PE, 35,000 employees, so decent size here. But as you can see, the stock has had some trouble in the past and maybe going through their own situations right now. So be aware of that. All right. So quite a few here, ladies and gentlemen. We've gone through again. I will list this in the comments below for the guys who are watching in the future. So that's our list of tickers of large cap, relatively liquid. Most of them very, very, very liquid. The Lockheed Martins of the world, General Dynamics, in terms of the option side, very, very liquid. Millions of trades going through on their stocks as well. So these are tickers that, hey, if things happen to go that way, and look, you want to be able to profit off that. A lot of these stocks made a whole lot of money, during the Iraq War. So we can't deny that there is money to be made in conflict. All right, there's a ton of money to be made in conflict, and that cannot be denied. As you can see here, 2000 to 2004 was very, very good for Lockheed Martin. And again, not aware if there were any splits available in this stock, but again, just going from the beginning of the conflict to where it was, I mean, $25, $26 to, if we want to say mission accomplished. And that was about August, right? August, July. So mission accomplished, $117. It's not bad for 8 years. All right, not bad for 8 years. $26 to $114 in 8 years. That's a pretty good return. That's a pretty good return on your investment, and boy, has it paid off in many other ways if you continue to hold on here. And there's I don't even want to put my moving average on here. Oh God, look at that! What a monster! What a monster! So shout out to Lockheed Martin. All right. Yeah, we could have talked about the defense ETFs. I just wanted to get really individual today. Of course, yes, they are ETFs that give you that exposure and remove that single stock risk. You can definitely check that out. All right, so there are quite a few of them, and I didn't want to get too, but KBR is another one. That's on the construction side, not necessarily a pure play military in terms of any components, but absolutely, it's those are tickers you want to be aware of. Those are the big players that should come to your mind automatically. Those stocks right there. L3 is very known in our community for IT support. Yeah, you'd be surprised how big some of those contractors are in terms of information technology. Jason Epps spent 2 years in Iraq working for Raytheon. Okay, good company. That's what's up. Did Trump's North Korea inspire the show? No. What inspired the show was something we've been wanting to put on since the drone was shot down in Iran. Because that conflict is really heating up under the surface. All right, it's really heating up under the surface. So that's something to be aware of. Right now, they're distracted, but please don't get it twisted. You got some people in the White House who want something to happen there. Textron is garbage. Okay. Textron is garbage. All right, so let's go ahead with your tickers, guys. I don't want to keep you up all night. I'm already late, so I really want to get through your tickers and keep the show moving. And again, man, let's look at this number tomorrow. All right, so I don't think, by the way, with this news about Trump and Xi not imposing more tariffs, I don't think we're any closer to a deal. There was a gambling site that put the chances of a deal happening on China at 35% for 2019. 35% of a deal happening. I don't think we're anywhere closer to a possible deal in China. I'd love for the deal to happen just because I'd love that to be off the table, and that could no longer be an excuse for the administration to constantly put Powell out there or put Mnuchin out there on Thursday, Friday mornings when things look like they're about to crack low, and then all of a sudden they trot his ass out here to, give us another 120, 130 point pop. Like clockwork, every 2.5, 3 weeks, it seems like. All right. So somebody's bringing up Baba. Interesting play here in this environment. Let's look at Baba. Let's go move back to the daily chart. Baba was at one time a high flyer, man, at the beginning of the year. Things haven't been so pretty for Baba lately. Not the prettiest candlesticks. Again, we can see very much from the SPY to a lot of indecision, but have been, moving higher. Have been moving higher again. Trying to stay at those positive RSI levels to keep, building that momentum. So let's see what happens with Baba going into the week. But this is not a stock that I follow regularly. But again, a very large company that plays. It's got a global reach. I mean, Baba has really been one of those companies that's opened up business to places that you could, never imagine. Everything from Colombia to Nicaragua, all these small little, places in the world where development has really taken off because these small mom and pop shops can go on the internet now and source products like never before. And Baba has been one of the innovators of that. So huge company. You got to really look into that. Baba is the China of Amazon. Oh, yeah. I mean, but they're bigger. It's a bigger story than just Amazon, Amazon has been amazing to America because it's allowed a lot of people to sell their products on Amazon to be able to make money. And of course, Amazon sells their products and undercuts retail. But Baba is about helping you create your business, right? Sourcing products for you to either sell through an internet website or in many developing countries in your own storefront. And that's where the big difference is. Yeah, somebody saying lower highs. Yes, yeah, we're seeing lower highs in the stock here on Baba. So looking a little tired, but we'll see what things happen. All right, right now very much still healthy, and obviously the entry was missed here, so wouldn't jump in long here, until we start seeing a little bit more confidence in those candlesticks. But if you're already long, enjoy the way. What's going on, David Lincoln? You said you're short Beyond Meat. Yeah, we talked about Beyond Week last week, man, and a lot of guys, they said, I was crazy for thinking this is going to be lower than 250 at the end of the month. Looks like I was right. Looks like I was going to be right. We're going to be below 250. You had a lot of guys who, hey man, buy the 200 calls and set it and forget it. Not looking so pretty right now on Beyond Meat, but again, a stock that hasn't been aligned. I can't even get my moving average out yet because right now we're still trending very, very well since the open, right? Since the IPO. So for the most part, still doing very well. And you had some investors take some cash off the table here, but still holding moving averages quite well here on Baba. So, still above that 10 moving average, just barely. But that short-term moving average on Baba is still, at least on the daily, holding up very well. Now, if you look at the hourly, right? We've had guys come in and buy some dips here. So we'll see what happens in Beyond Meat. All right. So this is going to be really, really interesting. And again, I compare Beyond Meat so much to GoPro because they just that hype, man. I just feel like that hype is just going to destroy this company eventually. I just see that when I look at Beyond Meat, and then I see similarities in GoPro. Two companies that had a very unique product, but in themselves are so small that a competitor that is larger, that is more financially stable, can come into the business, which very much happened, right? I mean, you had companies like Sony and Samsung, and many of them come into the business and offer products that just destroyed them. Just basically destroyed them. And again, when GoPro came out, 2014, 2013, cell phone cameras weren't there yet. I mean, they just really weren't there yet. Action cameras really weren't there yet. You had guys who were using GoPros to do YouTube. Are using GoPros to do YouTube. Now you can do it with the XR. That cuts in your returns. And now Tyson is in the food business or veggie meat business. So look forward to, in my opinion, Beyond Meat is not going to be very pretty. And we're seeing a very similar setup. Very, very similar setup where you have second month, third month. And let's see we're in the second month now. Let's see what the third month. We're already running into a little bit of trouble per the candlestick. But I don't see this being very, very pretty. I don't see this being very, very pretty. And we're already seeing the setup here in Beyond Meat. All right. So very expensive because the options have quite a bit of IV on them. So they're priced really expensive because there's a lot of demand. So if you've got margin, this might be a great opportunity to actually take in some of that value and sell some calls if you know how to do that. Sell some calls and use time on your side. All right, use time and put that on your side by selling a more expensive call against a cheaper call, putting it way out there. Yes, you kind of cap your profit, and yes, you do end up kind of trapping in some capital for the long term. But if you're right, it could be very lucrative because you're getting in so early. All right. What's going on, Chris McKinney? Have I talked about Bovada setting up a bet on whether Trump can get a deal with China? That might be the company I'm thinking about, Joe Legend, because again, there's an article I read about a company that has a deal, and I think it's like 35% or 40, somewhere around there, 35 or 40% that will actually have a China deal this year. I don't think they're anything any closer than they were in October. I don't believe it. JD.com. JD.com. Is this the one that's like the Netflix of China? Understand that China only allows 6 movies from the United States to enter their theaters a year. Rap music, for the most part, is banned in China. So it's very hard to get an American rap artist in China. Now, though, if you're Chinese, you can rap in China all you want. But American rap music isn't allowed in China, or isn't easily downloadable, I should say. And JD.com is, if I was told correctly, a Netflix of China that specializes in Chinese, films and movies. So JD.com is the ticker, and it was a nice little runner for a while here toward the end of the year. I mean, it got a lot of popularity. I saw a lot of guys tweeting about it. There's some nice real money being made in JD.com, but the story, kind of fizzled out here because I don't see too many guys talk about it like they used to. Oh, that's IQ? Is it IQ? Okay, it might be IQ. Okay, so IQ is the one? All right, so they're both labeled as technology. So IQ, JD is different, but IQ is that ticker. What? Why was it? Okay, it was IQ. All right. So, yeah, I remember guys talking about it big time. Yeah, that's about it. IQ. All right. Yeah, I'm really suspicious of Chinese companies after I watched the movie China Hustle. I'm like, God damn, where was I 2009, 2010? There's a whole crap load of money to be made in those Chinese stocks. But you still have quite a few of those Chinese companies that come out and go boom and bust quite frequently. All right? Quite frequently. Beyond Meat, H&S. Okay. Anybody good with tobacco stocks? Nah, give us some tobacco stocks. We'll take it. All right. Somebody said looking at Head and Shoulders and Beyond Meat. All right. So let me get some other tickets from you guys here. Let me get some other tickets for you guys here, or we'll just randomize it. Let's see here. We're not getting a move out of the financials at all that we saw coming into the week. Had a really interesting day on Friday on tickers like Bank of America and stuff like that. Again, these are dirt cheap, option plays like Bank of America. You can make a nice little grip here if you know what you're doing. Nice move on Bank of America, and quite a few of the financials on Friday on a nice little pop going into that G20 meeting. It took a lot of people by surprise, but again, it's just so hard to believe that any of those financials running when gold continues to hold all-time highs. I mean, I don't know, not all-time highs, but 5-year, 6-year highs on GLD. I mean, this has been a monster. That green line there is a 6-year resistance level that gold is now above and holding very well. So many guys were trying to run and buy puts on GLD because of the news about, the rate cut. Obviously, a rate cut will then lower the cost or lower the value of the U.S. dollar. That doesn't help commodities like gold. That actually lowers their value because money becomes cheaper. Equities are able to borrow more money. But now the play is, well, it's not a justified cut. We're already at all-time levels in terms of corporate debt in a declining revenue environment. Now I'm looking at gold as a hedge, right? A hedge, because we are going in an earnings cycle, which will start in about 2.5, 3 weeks. That is not going to be very, very pretty. That's not going to be very, very pretty. It's going to be really interesting to see how they cut rates this month. You guys remember that the talk toward the end of last month was all about rate cuts in July. Now we're in July now. This is just July 1st, and we're going to see how the conversation continues to go, because I want to see, how do you cut rates with a market that's going higher? How do you cut rates with a market that's going higher? Remember, they got the rate cut, or they didn't get the rate cut, but they actually got a halt of rate increases back in October, November. They said, okay, he came out and said, okay, I'm not going to raise rates anymore, and then everything started going up higher again. You know, you guys remember when Jim Cramer went, they know nothing. They know nothing. Oh, what is he doing? They know nothing. Time to get rid of him. Time to get rid of him. You know, I can't stand Jim Cramer in his own way. This guy's just, you know, anyway. But, you know, his bashing, along with bashing from Trump and a lot of pressure from the Wall Street elite, got him to back up. Got him to back up, and now he's basically a pet. He's a pet for the administration at this point. Man, you can't come out here and say he's, you know, at the beginning when he first showed up, there was a lot of talk and articles about him being very much independent, correct? He was seen as an independent regulator. That's what he was posed as. He posed himself as. Not so much anymore. Not so much anymore. Somebody brought up WFC. That was really interesting. Wells Fargo. Yeah, that pop. You had a nice little pop on financials overall, man. You had a nice little pop on financials overall. Wells Fargo is a really interesting company. After all their situation and all that crap, they're trying to get it together, but the brand might be damaged irreparably on Wells Fargo. Desert Edge, you said, when is the meeting? I'll have to look that up. But if I'm correct, it is middle of July. Yeah, Katos is one of them. I mean, high volatility military stock. Katos, you know, in the investment community, this one is not brought up again because it believe it or not, it's actually considered a small cap. Or a stock, because it very much was a penny stock until not too long ago. You know, this was a penny stock until March of 2018. Katos is the ticker, but yes, this is a defense and security solutions company, and their awards for the government are relatively small in comparison to the Lockheed Martins of the world. Right, so this is a company that's got a very large market cap. Trades at incredible. Look at that PE ratio, 375. So, in the investment community, reputable investment community, Katos is not one you touch. It's just not one you touch, because many people do believe it's a penny stock underneath the cover. All right, and just do some research on it. You'll see the articles out there. All right. Let's go. JP Morgan. JP Morgan and Chase. Obviously, again, one of the largest financial institutions in the world, JP Morgan. All right. Yeah, this is one I haven't been following very much here. Obviously, having some trouble here with these all-time highs, but then again, who isn't? This is a company that missed earnings last go around, right? And you pretty much gone nowhere since February of 2018. This has been an incredible stock to probably do an iron condor in. I mean, look at this one. What is that? Basically, outside of 2 or 3 or 4 months here, 3 months here, you've pretty much been, 106 to 118, month in and month out. So JP Morgan Chase gone nowhere over the last year and a half. And you got to understand this can't go on forever. And companies like this, eventually you either break out very violently higher or this thing comes down like a ton of bricks. But as you can see, yeah, you see it right here in the chart. You can't stay at the levels like that for very long. Eventually somebody's going to give up, and it's a very violent way down or up, whatever direction that is. All right, whatever direction that is. And you see that a lot in stock tickers that go sideways like that. You see that a lot in tickers that go sideways like that. And even in intraday situations, or in situations where you're trying to break a resistance level, right? That sideways action ends like a hot pot trying to explode. And what happens is you see a violent breakout to the upside if it does go higher, where the following candlesticks are just like three soldiers sitting on top of each other, all right, as they explode into that new high. What about AAW? AAWW. Let's take a look at it. Atlas Air Freight and ticker. Okay, so relatively 2004, 2005. Yeah, man, it hasn't really done much, man. It hasn't really done much. Relatively low volume. I'm seeing average volume here, 274,000 shares. I'm not seeing a real story here to go along with. As you can see here, we've been in the greatest bull market the world has ever seen, and this company has been pretty much out of the loop here. So definitely not something that I would want to put my money in, because it's obviously not going in the direction you want to see. Things could change, but the past hasn't necessarily been giving us a favorable look at that happening right now. All right. Big KH, you said they're supposed to be doing deliveries for Amazon. Let's zoom in on the daily. If that's the case, yeah. All right. So if that's the case, we'll see a nice little pop in the stock. You'll have investors who will buy that kind of news. But, remember what was the company that Amazon said that they would let people do the returns at? What was the name of that store, guys? And remember, it exploded for like a week and a half. Was it Target? What was that store that Amazon said you can start to bring your Amazon packages at? Somebody in here in the Kohl's. Thank you so much, Mr. Cool Millie. Kohl's, which I think their ticker is like. Is it KO? Let me just type it. Is it KOELS? What's the Kohl's ticker? Let me see. What's their Kohl's? KOH. Oh, KOHLES. Okay. All right. KSS. Yeah. What was it? Where did that news happen? I want to say it happened somewhere. It wasn't that long ago. I want to say it was in 2019. Maybe it would have been that day or so. I can't remember the exact day. Except Amazon returns. I want to say, I'm curious of what day that was. That was April 29th. Was that a red day? Seriously? So they sold on that news? I'm really curious. That April 20. Okay. Not 29th. It came out April 23rd. Okay, so yeah, it was that. All right, so yeah. I was like, no way guys sold on that news. So April 23rd. This was the day the news dropped. You had the gap up 71 to 75, 67, 76, 11 was the high. And then guys dumped it after that. They basically dumped it after the news. Man, because it's retail. At the end of the day, it's still retail. And they dumped. God damn, that would have been a beautiful call option, put option. God damn, look at that. Man, that would have been beautiful. But yeah, guys dumped it after the news. Yeah, that came out the 23rd. I was like, I know guys, as emotional as traders are, there's no way they sold on that news. But it came out on the 23rd. Came out on the 23rd. So you bringing up that news, AAWW doing deliveries for Amazon. But I thought they Amazon's doing this thing with the $10,000, helping people create their own businesses. All right, but helping them solve that last mile has been an issue for the company, and they've been trying so hard to find out how to be close to Americans and be that solution, create that desire to say, I don't feel like going out. I'm just going to go and order it on Amazon because I can get it in 24 hours. That's really what they want to get to. They want to be able to get to every American within 24 hours and not have you pay extra for it. That's why, again, I've talked about Uber and Lyft and all of these gig companies being a losing game because they're set for a scale that is constantly cutting lower and lower and lower. They're constantly getting less and less valuable. Any gig job you get in today will be more than likely cheaper and will pay you less, over a period of time. It's never going to be the opposite where as an Uber driver, you're going to be earning more and more next year. It's not how it works. It's literally going to be driving the cost lower over time. That's why the incentive is to phase out drivers, to get automated cars, to get, workers out of there. Appreciate you, Major Market News. All right. So let's keep it going. Somebody brought up Whole Foods. Whole Foods has been an interesting lag on Amazon since that acquisition. Since that acquisition. They got swallowed up, right? They're not separate companies. Is that correct? They don't have a ticker anymore, right? I was never a fan of the ticker. But I think many people would agree with me that Amazon, something about Amazon's different since they bought out Whole Foods. Amazon itself trying to find its way back to all-time highs. Boy, this ticker is just so damn expensive. I would just really love if they did a stock split. I honestly don't understand why they haven't done one already. Do a forward stock split. Make it cheaper for American people to invest in it. Make it cheaper for me to buy some damn options on this motherfucker, And that only makes it, a more attractive target for people to want to, participate in what's going on here. I never understood why a company like Amazon doesn't do that. They surely should. Obviously, I'm sure it's been discussed, but, they're looking at it, hey, money is cheap. You can find a way to buy our stock. But, an $1,800 stock for just one, that's insane. That's insane. CETX, man, every time somebody brings up that ticker, it's always what could have been. What could have been owned by this Indian family that, had these ideas of like going to these third world countries and just kind of being like the be all end all of their infrastructure and chemical needs, because CETX is quite big in the field, but now struggling just to maintain compliance on the NASDAQ, struggling just to stay listed. That's tough. That's tough from where they are right now. All right, what's going on, Cool Cat Beats? Back in 2000, I thought Walmart was just taking over the world. Has Walmart lost its mojo? No. Absolutely not. Walmart, the Jet.com acquisition, they figured out how to be competitive in the age of e-commerce, man. I mean, they really figured it out. Uh, Walmart.com with their local pickup, where you can buy products on Walmart.com, pick them up at your local store, where you can shop for groceries at your local store, and the groceries will be ready within a certain time frame. So Walmart is figured it out. They figured out how to continue to pay workers shit wages, not offer them health care, continue to put your workers on the backs of taxpayers through welfare and Section 8 and many of these other government programs, and at the same time pay little or no taxes. They figured it out. They figured out how to scam America. And they're being rewarded for it. And stockholders who, have held on to the stock for the many years that they've been traded have been rewarded for it through dividends. So nobody gets fucked in the ass better than the American people. And Walmart's done a great job of fucking you in the ass. Since 74, they started trading. So American people have gotten a good rimming from Walmart. Oh, he's back from deployment? Oh, shout out to you, bro. I didn't even know you were in the military. Shout out to you. Welcome home. Let's take a look at Teva. Teva. All right, pharmaceutical industry. Yeah, a couple of you guys have brought up this ticker a number of times, but I never really bothered to look into it because it just seemed like a shitty stock. So never sure what was going on here on Teva and why many of you guys liked it very much, but you know who to call if you got some interesting news on it. Yeah, but the Waltons are very politically connected. Walmart, again, just trying to finish up my rant on Walmart. In many states, Walmart is actually the largest employer. So there's an incentive for a lot of politicians to be very gentle with them because they have a considerable amount of their constituents that work at Walmart, that have family members that work at Walmart, that have businesses that depend on Walmart in their local communities. So if you're a congressman in District 12 in Buckfuck, Alabama, and Walmart employs 1,500 people out of the 11 to 12,000 people in your district, that's a lot of families that are affected. And then you got local small vendors that are helped by Walmart, the painters, the cleaning companies, the distribution, small trucking companies that are paid. So it's a lot of little things that Walmart has been able to influence and create a small ecosystem around. It's a large ecosystem around its business, right, of supplying Walmart, maintaining Walmart stores, that make it very difficult for politicians to look at that and say, all right, we need to break that up or something like that. That's really, really unique. They got companies publicly going on, a CEO has publicly going on CNBC, and also entrepreneurs going, yeah, we need to break up Facebook and break up this. We should have broken up Walmart years ago. We should have broken up Walmart years ago. But they don't want to talk about that. They want to break up a company that offers you a product, a service for free. Imagine that. They don't even ask you to be on their platforms, but we're going to break that up. But a company that literally has a chokehold on America's retail industry, we don't want to talk about that. It's hilarious. Absolutely hilarious. Yes, indeed. He's still here, Chris. He's still here. He pops in once and now, but he's got his own little forum, Discord now. So he's got his little Discord now. Will Amazon take over the world? Absolutely not. As long as we continue to have a fair playing field, they won't. As long as we continue to have a fair playing field, there won't. There'll always be another company that's competitive. But Amazon is a situation where, again, when you reward companies for not being able to be profitable, for being able to spend their way into debt, continue to spend their way. Because again, Amazon's not a profitable company. A lot of people don't know that. Amazon's not profitable, but Amazon is always able to find cash because the expectation is that they're going to just continue to grow and 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 grow. Let's see here. IYR, real estate, 85 put. Yeah, the real estate market is really interesting, man, because, the ETF is just not really done, justice to what the numbers are showing. I mean, across the board, when we talk about real estate, it's down. It's just down. Wherever you want to look at real estate, year over year or 5 years over 5, you see a trend of sales numbers going the wrong way. But yet we're not seeing that in many of these home builder stocks. You're not seeing that in this ETF. Obviously, has been a nice little correction over the last week, so we'll see that follows through. That 85 put is a really nice idea there. But as you can see here, we've had times where you think, IYR is coming down, and it's fooled you every single time. And at least on my strategy, these would have been losing trades here, trying to play the downside or the failure on the 25. The weekly shows basically no cuts. As you can see here, coming out in January, there's been no breakdown. So even on the safer long-term trends, we have yet to see a breakdown on 2019. And that's really interesting, because when you look at, again, companies that participate in the industry in a large way, Lowe's, for example, one of those, had a hard time with those 117 levels. I've been watching Lowe's very much, made a nice quick bit of change here on Lowe's, and that beautiful, beautiful double top. Oh, God, I don't think you can draw double top prettier than this on Lowe's. Also, Home Depot was another one that was, inability to kind of break all-time highs. But again, these are tickers that over the last couple of weeks have moved higher, even though numbers consistently showing that real estate sales and construction and new home sales are declining, substantially declining. So it's going to be interesting to see, But again, we've talked about this here on the show. You just really have to continue to look and see here that, hey, these companies are not able to break these RSI levels. These things really don't lie, right? They really don't lie. Here's 20, right, for our bears out there at 60. Just get close. Oh, let me tap it again. 20 and 60. Oh, there you go. So 20 and 60, that inability to really break out of that level. So this is going to get ugly here if we go right back below that 60 RSI level. But as you can see here, this is where the volatility has really been happening with Home Depot and its inability to touch 70 again. All right. As you can see here, this is incredible, RSI divergence here. Look at that. Look at that correction. That's massive correction here. Look at that correction here. That volatility found support at that lower 35, 34. All right, inability to set a new high right there. There's another short here. Inability to break that RSI high. All right, and here's another one setting up too. So this is going to be another strong downside move if it breaks below that RSI level, the 60 RSI. All right, so it's going to be one to watch. It's going to be one to watch. You see here, and you can see here again, inability to break RSI highs. Is very interesting. Kind of always results in that huge inability to break. Here's the second one. That should went up higher a little bit, and then it faked and broke back lower. So it's really interesting to see what's going to happen here. But again, these are weekly charts, so you're going to have to be real patient again. Moving out to these lower levels, you can see here, all right, fighting to stay above those levels. Look at that. They're even trying to use that as support, trying to stay above those low SR levels. And it's managing so far, so we'll see what happens. But again, wrong direction. Wrong direction. Somebody brought up Shop. Really interesting to see Shop do what it's doing. Shopify, this is a monster, man. Centron Research came out and just shitted on the stock. I remember this was like 105, 104. The guy came out, wrote a huge report on it, calling it a piece of shit and that it was a fraud and that it depends on guys basically running this affiliate program and convincing millions of people that they can become instant millionaires using Shopify. Well, here's the thing. Shopify has actually made people millionaires. E-commerce, has democratized, the business of buying and selling over the internet. Shopify has really participated in that by creating a platform where for $24 a month, you can create a store with unlimited products, unlimited, digital products. I have a store on Shopify, thetraderslibrary.com, where I sell out of print finance books, right? So I don't get sued for that shit. That's on Shopify. And it runs by itself. It runs art. I run a couple $100 in ads and it just runs by itself. It's got a shitty, design and all that. But my store, it's more popular with guys who are like in Asia and Australia. Like I can't run enough ads for English speaking people in South Korea, in New Zealand, in places where they respect the idea of downloading an ebook and actually reading the material. Those are countries where learning is really, really appreciated. In these Asian countries like Singapore too, sales are pretty good in Singapore. And these people buy these ebooks and they actually read them and they come back and they suggest certain ebooks that I should post up there because their internets are really weird like that, where they can't get torrent sites and shit like that. So they can't go out and just, download these books. They actually have to buy them. So Shopify has been incredible for me, and I can't even imagine for the guys who really look at it as a full-time opportunity to be a market to the world. I mean, I could say it's changed their life. So read about some of the success stories that have been going on there. So Shopify is WordPress for the store, for the online store. Think about that. If you know about building blogs, then you know about WordPress. And think WordPress for e-commerce. There's just nobody else that does it better, period. All right, you've got an all-in-one solution. Now, obviously, they can't continue to go at these levels, right? I mean, eventually something's going to give here. But, for the time being, they've done it right. What's going on, Rich Million? Well, Oprah is out of Weight Watchers last I checked. Last I heard, Oprah sold her Weight Watchers stock. Last I checked, so Oprah sold out. Oprah is tight on cash. We talked about this on a couple shows ago. Oprah is tight on cash. I mean, she's out here creating her own white label pizza and doing all kind of shit that billionaires don't do. Going on TV selling pizza. What the hell? You're not a billionaire, man. That's not what billionaires do. She sold her cable channel. She doesn't own that anymore. So Oprah is really a manufactured billionaire. And, obviously what's done in the dark comes into the light because it's clear to see now that Oprah is a mere shadow of herself just 20 years ago. If you want to be realistic about her position in the world today, and that has a lot to do with the fact that she didn't jump on the e-commerce strategy. She was really late to the internet. Her and Martha Stewart. I mean, they're all struggling. If you see their YouTube channels, they barely have any views. They didn't embrace the idea of social media when it was young and unique. So they're reaping, the pain of that. Adam Gergis, W employees walked out. Yeah, I mean, look, I have a report that I wrote on W. Again, the $14 billion company that makes no money, and I talked about Wayfair and how, this is something that in the end, will not make it. Wayfair for all intents and purposes is built to fail. The company was built to sell paper, and that's basically what it is. It can't compete with the Amazons of the world. It can't compete with most of your online retailers out there. The company spends more money than it takes in, and has been continually doing that at an increasing rate over the last 3 to 4 years. One of the things that I'm learning in one of my classes right now is modeling, and a little model I did on Wayfair is just horrible. I mean, just going the wrong way. Basically, in every category on the balance sheet, it's going in the wrong direction for Wayfair. And yeah, with this news that they were helping the federal government provide beds and bed sheets for children in these concentration camps, it was sad to hear. But what's so sad about the workers walking out is that they don't understand how desperate Wayfair is for that revenue. Wayfair needs that revenue so badly that when you're desperate for cash like that, you've got to put yourself in positions to work with disgusting and nasty people who are doing disgusting and nasty things. Because that's what desperation does. It puts you in positions, where you have to do things you don't want to do in order to survive. And that's the position Wayfair is in right now. They can't say no to the federal government, because they can't afford to. They can't afford to. All right. But it still wouldn't do them any good because, again, Wayfair is really only an earnings, release away from a major capitulation. I mean, they're just really one number away. And it's got to be a dismal number because right now, what traders are doing is they're very forgiveful. I mean, you will miss the banks, for example, last quarter, nickel here, dime miss, 11-cent miss. And they were like, oh, okay, 2% down, I mean, this is a huge miss. So it's got to be so overwhelmingly nasty that people just say, this, we can't be behind this anymore. What was the name of the company that, where you can buy online stamps, right? It was stamps.com, right? SMT, something like that. It's going to be something like, it's got to be just ugly. All right, here's stamps.com. All right, and the weekly chart will show it better. All right. And again, it was just one earnings. This is one day. By the way, this was one day. And this was the second earnings report. It's just got to be overwhelming. People just like, it's a wrap. It's a wrap. It's a wrap. So when I look at this chart and I look at Wayfair, I see very similar companies. Companies that are losing money, that have just basically a nice little fan club that people love their little products and they're able to say, yeah, we're going to be around. We have a really exciting image. People love our products and, we're here for the long run. But that's not what the books say. That's not what the books say. And again, I wrote about this company on my website, Advanced Equity Research, and I got some really interesting articles coming back soon at stamps.com. And that's why I just want to catch Wayfair at what I hope is going to be the top. Because that's a whole lot of money being made on the downside, folks. From $262 a share to $45. That's a whole lot of money. A whole lot of money. Yes, indeed. Jeff St. Till, if I was Oprah and went on I would own apartment buildings. Yeah, I mean, but, I'm sure Oprah has probably some real estate, but at this point, she should just go away. I mean, that's what people do. You know, you make a lot of money and you go away and you go do something else. You know, but again, that kind of tells me the condition that Oprah is in. I think Oprah maybe owes a lot of people a lot of money or something like that, because again, she's working herself in a way at her age that doesn't look like somebody who has positioned themselves to enjoy the fruits of their labor. Then you got some of these guys who are trying to make themselves somebody, like Kobe Bryant and his little fund, and Shaquille O'Neal. Shaquille O'Neal, he's just willing to sell his ass for any dollar. I mean, this guy's doing, insurance. He's doing pizza. He's doing. I mean, you got some guys out here. It's just like, man, you're just willing to just do anything. You're just willing to do anything. I mean, and you gotta understand, people don't respect people like that. They don't realize it until it's like, yeah, let's get that nigger shack in here to sell our security system. And look, and if you make some money doing it, that's fine. Again, but understanding the way you are, when you position like yourself like that, understand that, one day when it doesn't work out, people will just start laughing at you. They just start laughing at you. Yeah, body armor. Yeah. Oh yeah, Kobe. Yeah, Kobe's doing some things, some good things. I'm not denying that. I'm not denying he's doing anything bad. I just hope he doesn't end up, doing what Oprah is doing. Again, make your money and then, live the life that you created in a way that's enjoyable. But don't build it up and create this thing and this huge image only to end up now, scrambling for just, pieces. Oh, well, everybody hates Michael Jordan. I mean, nobody likes Michael Jordan. Jordan has been a beneficiary of his own greatness in terms of on the court, but as a human being, he is a disgusting person. I mean, he's a disgusting person. I mean, when was the last time you heard a player say a nice story about Michael Jordan? You don't get that shit. You never see that. You don't see that, but you see Kobe and Shaq. You see guys always, till today you hear stories about, guys like Moses Malone and all these guys from the early. You don't hear those kind of stories about Jordan. Jordan was a disgusting person, man. A lot of players thought he was selfish. There've been some really interesting books I've read when I was a kid about Jordan. As an individual, not as a basketball player, but just as an individual. That's why a lot of rumors have been able to continue about him, even though some that weren't true, right? About him investing in private prisons and things like that. And they've been able to linger and hurt him because, people don't see him as a good person. People don't see him as a good person. Life for a Business said Jordan was scared of Dennis Rodman. Oh, I had no idea that. All right. But yeah, I want to do a show on these little bubble companies, and but at the same time, I don't want to end up like this guy on YouTube, Epic Economist. I mean, this guy's channel, he's got wonderful production. Do you guys watch his videos, Epic Economist? Wonderfully produced videos. I mean, I wish I could produce videos as good as he does. But I mean, every video he comes out with is doom and gloom. And at this point now, people in the comments are just laughing at him because every title is the recession is coming, the recession is here, the recession is proven, the end is now, and the market keeps going up. So they're laughing at his ass. They're laughing at his ass. I think he'll be proven right eventually, but man, this market is hard if you believe in capitalism the way it was taught traditionally. You know, this market is really hard. You know, this market is really hard. You know. I mentioned earlier about the weekly call strategy that was such a winner for guys coming in to the Trump election. You know, buying these weekly calls. Obviously, there were some weeks you missed out, but for the most part, if you did it as a strategy, you did very, very well. I mean, even better if you went on the monthlies and you just kind of bought on the first of the month and you just kind of held. And, you know, that was a winning strategy for, you know, quite a while there. I mean, almost a good 6, 7, 8 years. You had a losing month here and there. But for the most part, it was very, very it was very, very lucrative. And so far, so good. And we're going to see now over the next couple weeks whether or not we break above these highs and continue to go higher. You know, but we've got a very, very interesting earnings cycle ahead of us, which is expected to be one of the worst in recent memory. And what I like about this earnings cycle is that unlike January, unlike March, now this is going to be 3 in a row for many companies where it's going to be like, okay, do we really keep running if we've missed 3 in a row? And I'm talking to you, you know, Mickey D's. I'm talking to you, Mickey D's. You know, which recently busted out of a resistance level. You know, do we keep running now that we're 3 and 4 in a row missed now earnings? This is going to be really interesting to see. You know, because at this point, you know, this is crazy. This is crazy. He said it's so hard to be short on the market. Well, that's the thing, is that your shorts have to be short term. Your shorts have to be short term. You know, your shorts have to be short term. You know, we had a ticker in what am I typing? I just started WDC, Western Digital, and Western Digital. You know, I again missed the long term, but Western Digital was a really nice play where, again, it had broken my signal that I look for. And, you know, the trade was really nice. It was a nice trade. It got brought up, you know, by Black Box. I saw the trade on my birthday, and I liked it. I liked it, and then I followed it through. And, you know, again, now it's headed to Pluto, and that's just what shorting is now. You know, very rarely are you going to get Macy's. Very rarely are you going to get GameStop. You know, you're going to have to get these shorts and understand that, you know, you're going to get maybe a week, maybe 2 weeks, maybe 3 weeks at most. But for the most part, you're going to have to be ready, you know, to sell out of them relatively quickly once they break those closing moving averages that I like, you know. So it's just what it is, what it is. He said nobody can really protect the market. I think you're thinking predict the market. Yeah, nobody can predict the market. Nobody can predict the market. And that's what we're trying to do here. We're just following. That's all we can do is follow. That's all we can do is follow. You know. But at the same time, I do believe that there's something in data, right? There's something you can see when you put up a considerable amount of data, when you put up, you know, a weekly or a monthly or daily or a monthly chart, and you know, and again, a decent moving average. And I think you can look at these and say, remove our indicator moving drawing tools. And I think you can say, you know, when things like this happen, that, hey, man, this doesn't look too good. Maybe I should take a position to the downside because I think this will continue to go lower. You know. And that's why we use these indicators to hopefully help us and guide us, in our trading. Desert Edge is my 2510, man. My moving averages here, 2510. That's all I use. 2510 and RSI. Rich Million Gold chart. Yeah, I just got done talking about gold. I'm really excited about it, man. I think gold is one that if you understand how and where we are in the economy in terms of, all-time highs in terms of corporate debt, personal debt, now coming with a rate cut, which encourages more spending. Again, a declining revenue-generating environment. So we've got companies taking on more debt, individuals taking more debt, with the inability to repay the debt they're now taking on. So yes, if you are a high net worth individual, if you're a financial institution, you buy gold to hedge your risk on the equities. So even with gold now surpassing these surpassing this 5-year, 6-year resistance level, and it could very well come down, right? Because now here's the Keltner channels. We're way above that, right? So, the short term, we could have some resistance. Again, we're at 76 RSI there. So there's resistance in terms of the mathematical possibilities of continuing to go higher. But if you understand, again, the macro, then you buy here and you put a lot of time on that, or you buy the stock or option, again, with a lot of time, and understand that it's still going to increase over time. All right. You'll still be at a much higher price down the road because, very much so have a lot more air up there in gold and quite a bit of resistance down here. But again, we're not talking about coming down to these levels. We're talking about the fact that we've broken out of a 5-6 year resistance level, and that says something. Yeah, clearly a long-term uptrend that's already been established now in GLD. And now we're just all about the follow-through. And you have some guys who are waiting for the pullback, and, it could happen. Could very well happen, especially if that conversation starts to heat up about the cut. You might see some profits taken off the table here. But, if we look at, GLD, and you look at, for example, the monthly chart, and you look at some of the other gold tickers on some of these other, you notice that, this is, the sign's been made. This is a massive breakout here on GLD, on the RSI, on many other tickers too, also involved in this commodity. This is where you want to be. This is where you want to be. Look at that. The ticker has not broken out above 60, going back to 2012. 2012. So yeah, you got to buy this breakout. Either way you look at it, whatever time frame you look at it, something's been made here. You got to chase that. But again, you've got to give yourself, time to enjoy this, because it's moved relatively quickly in a short period of time. So it coming back isn't out of the question. But the long-term trend, yes, has been created. All right. And again, you can look at other tickers if you want to go real tight. You can go into the AUIs. All right. So here's the penny side of the things. All right. So again, these companies, and you're really going to have to do your due diligence on these. But when the commodity really starts to run, these companies really get helped out a lot. You can go really crazy with the JNUG. I don't think it gets even prettier than this. Here's JNUG on the monthly chart. It's been a monster. I think we just reverse split recently too on that. JNUG monthly. These tickers have experienced massive inflows. Massive inflows over the course of these last couple weeks. All right. So OTC, learning the shorting game for now. OTC shorting, holding TREP. Okay. That's what's up. NG stock is a good one for, yeah, NG is another one. Yeah, NG, thank you for bringing up NG. Forgot about NG. But yeah, this is another one. This is another ticker. All right. Look at that runaway, these runaway candlesticks, man. Here's NG on the monthly. You know, you got a couple small ones. Load comes up. Here's another load. Oh, wow, that one's, whoo. Boy, that one's still beat up. There's a 19-cent one. Yeah, I probably wouldn't touch load, but boy, that one back in the day used to be a real runner. But boy, 19 cents, man. You think they would reverse, but nothing so far. Have I ever used candlesticks to place a trade? Nah, man, because I mean, you know, when you're talking about these short term, you know, this is just noise, man. You know, it's for the most part, as I mentioned on my black box video, I just realized intraday that I wasn't short. I wasn't smart enough. I wasn't smart enough to figure it out intraday. I was guessing a lot of times and losing. So now, you know, we are looking at numbers and we're trading more longer term charts using these moving averages. We're looking for companies that are not winning in an environment where you should be winning because the game is literally rigged for you to win. Right? So betting on stocks that are easy. Right? You say, oh, you're buying puts in Macy's. You're not a real trader. Okay, yeah, you're right. I'm not a real trader. Fuck. Yeah, oh, that's fine. That's fine. I'll keep my Macy's months after month after month. Yeah, you're right. I'm not a real. I'll fine. I'll be not a real trader to continue to win in Macy's because I think Macy's is going to be a company that will go out of business in my lifetime. I'm okay with that. You know, I want to find companies that are losing when everybody should be winning because that's where the profit is. All right. And by the way, that SHLD got, I loved looking at Sears, you know, because you talk about missing opportunities. You look at Sears and some of these downside moves in this, you know, these puts that, you know, literally went from, you know, 35, 36 to 30 cents, you know, to 30 cents, you know. So intraday, using black box, right, using the algorithm to find opportunities, you know, using my strategy that I put in the video, and then over the course of, you know, periods of time using data and fundamentals, then we find companies that are struggling to compete and, you know, riding the wave down. Do I have a stock mentor or someone you truly listen to? Absolutely. Peter Schiff. You know, if he wasn't too much, you know, now he's been leaning a little bit alt-right, which isn't cool because he kind of lets politics get into it because, you know, he gets himself kicked off all these really reputable business shows because some of the things he says in his podcast are just a little, God, I can't wait. I hate it when people self-destruct themselves. And that's his situation because he's so talented and incredibly bright mind, and people need to hear what he says. But, you know, when you go off track and you start talking about things that you don't really know anything about, you know, like the ghetto and, you know, I mean, things like that, you know, LGBT issues, you know, you don't really know those, you know, really know about those things. You shouldn't be really talking about those things, you know. And he's kind of fucked himself. He's got himself kicked off of MSNBC. He can't go on CNN now. So now he just goes on RT and does conferences, third-rate conferences. So Peter Schiff is a guy that I really listen to. And he's not even more of a market guy as much as he's a gold macro guy. All right. So, absolutely. Mm-hmm. So let's see what else is out here. And I'm just looking for tickers. And again, we're up after hours right now. Pre-market is the word. We're up pre-market. Again, they've done a really good job. We're actually down on gold pre-market, but they've done a good job on getting crude back on its feet, man. They've done a really good job of getting crude back on its feet. As you see, it's been an awesome 2 months. 1 month, and now first day of the month on crude. I put out this video of this one trader. He snuck it in on Bloomberg about them blowing up, those tankers out there in the middle of the Iraq Ocean or Iran Sea or whatever that was. But that was really cool how he snuck that in on the show. That was really, really cool. So I posted that on my Twitter, GOT Penny Stock. So definitely take a look at that when you get a chance. But he snuck that on the show. I thought was really, really cool. All right. With the NFL protest, do you see appeal of owning an NFL team? Absolutely, man. I mean, look, NFL is always going to be an incredible sport, man. You got to understand the NFL is, you're talking about some of the best athletes in the world. And now, for example, you're looking at what the NBA has and now the NFL, where you're seeing generational lineage being passed on now, where you have players' sons and their sons coming through. So you've seen the perfection of human ability over time. And now you as an owner, you own that. You literally own these players. And it's only going to get more expensive. The salaries are going to get high. The ability to watch the games is only going to get more expensive. So, if you look at the price of NFL tickets compared to what they were in the early 60s and 70s, a working man could take his whole family to see a game. For example, you talk to some of these guys who are like diehard football fans with their dads. They used to think, I used to go, talk to those guys who are like over the age of 50, who grew up with dads who loved their NFL teams. They said they used to go to the games all the time. Now these guys can't even afford to take their kids to the game. You got guys here, they got to go to 1 or 2 games a year. You have guys today that can't take their kids to the game, but they grew up in households where their dads were season ticket owners. Season ticket owners, guys, had dads who religiously would take their kid to the game. All right, now the NFL is a luxury product. The NBA is a luxury product. To go to an NBA, NFL game today, you got to come out your pocket, something real nice. Something real nice, Or you're going to sit up way the fuck up out there because they understand that some people are so in love with the game that they will go and take a seat in a part of the stadium where they can barely see anything just to be a part of it. How do I feel about robotic stocks I'm eyeing? Well, yeah, I mean, I think we're still really early on that, I think we're still early on the Boston Robotics thing and the whole idea of robotics being a part. But again, in manufacturing, it's already arrived, right? I mean, it's already arrived in manufacturing space. But this is an opportunity to be early in it, But when you start seeing the same kind of conversations about robotics that you saw in 2012, for example, about marijuana, right? Then that's when you really can jump on the space. I mean, you can get in now, sure. You can get in now if that's what you want to do. But your time frame better be long as hell, man. Your time frame better be long as hell, unless you got some kind of new news or fresh development that could be happening over the course of the next year or two, where we could start seeing this become standardized within multiple industries outside of move this box across the hall and across the factory. You know what I mean? But yes, robotics are the future. Absolutely. I'm about to close it out, Rich Million. I'm about to close it out. With the NFL pros. Yeah, okay, I answered that question. But yes, indeed, man. Yes, indeed. What's going on, Rel? Appreciate you. Uh, there was a nice article that came out on FedEx recently. FedEx has been quite honest these last several weeks about their situation and what's been going on there. FedEx has been very, very honest about the fact that they're struggling in Asia and that they're losing, a lot of money due to the tariffs. And they've been begging Trump. I mean, they're literally going on begging Trump to solve this, to fix this, to end this. And FedEx has been really, really, upfront about it. And you can read a lot of news about what FedEx is saying. And missed opportunity here. I think I really should have put this front and center. It's been a while now, right? I mean, going back to the end of 2018, and FedEx now, having a hard time finding its way here. Let's kind of zoom in a little bit on the short end. Here's the daily chart. So trying to find its way to break out higher here after some lows. So maybe FedEx could be a buy here. All right. Again, that's the 10 moving average. Here's the 25. Not the prettiest candlestick you like to see on a Friday, but this is going to be interesting to see where FedEx goes here. Not the cheapest option in the world, but definitely one that's liquid and has opportunity and is priced accordingly. So we'll see what happens here with FedEx and whether or not they can stay trending higher. All right. So one you should pay attention to. Really interesting. When it gets their stuff from China, they do. You're right. And I completely agree with you, right? Why don't tariffs hurt Walmart as much as they hurt some other companies? Because the market is just more forgiving for some companies than they are for others. Right? It's just what it is. It's just what it is. Also, you got to understand that some of these companies, like Walmart's, are placed in these passive investment funds where literally, hundreds of millions, billions of dollars flow into these stocks every single day. So even with, detrimental news, the amount of capital that flows into Walmart and, some of these other places that have significant exposure to Asia and what's going on there are not affected. And you can see that in the numbers when you talk about where some of these stocks are and the increase in passive investing and the effects of it, passive investing in stocks. And also, you got to understand that Walmart's also been actively buying their stock. Good night, Reach Million. Walmart's been actively buying their stock. So, they're participating in helping to, increase the value of their shares. He said Walmart is large enough to squeeze suppliers. Absolutely. That's always been a huge problem at Walmart. And many suppliers have lost businesses, lost everything, because they can't get Walmart to be fair to them. That's been a problem. They've had documentaries made on that. Entire documentaries made on that. No crypto for me. No, I got $400 in Monero. That for the most part, it's been done doing a little bit of that, but crypto is just not for me at all, man. It's just not. It's just about buying it and selling it to the next guy. The technology is very valuable, but there's no value to the technology because it's all about limiting cost. Literally transacting business at no cost. So something that's no cost, and basically has no value to a business. Basically has no value to a business. So the technology underneath Bitcoin is a losing game for anybody to really be in an honest way. I mean, if we're talking about trading honestly, in an honest way, because everybody was just using technology to undercut each other to a point where you gotta basically make half a cent or a cent to make some money on it per transaction, because everybody can undercut you because the technology is open source. Nobody owns the technology. Nobody owns it. All right. So Bitcoin in itself, it really only has one thing going for it, is the fact that you've got a certain number of people these days who agree it's going to be only capped at 24 million or 21 million, whatever it is. And that's it. Bitcoin itself is not controlled by any person. If it fails, nobody's going to give you, a rain check. Nobody's going to, it's not protected by anybody. It doesn't generate earnings. It doesn't have a committee. It's nothing in itself. Guys buy Bitcoin to sell it to somebody else, period. When Bitcoin was running the first time, you remember all the gas stations and all these Bitcoin ATMs that came out. Now you don't see that shit. I thought Bitcoin was the next money. If Bitcoin was the next money, where's that this time around? You remember how many Bitcoin ATMs were popping up out of nowhere when the first go around? Now guys aren't doing that. So something's different about this rally. Something's different about this rally. I think there's more greed in this rally than probably in the first one. Because the first one is actually more, you had people who actually believed that the technology, the underlying technology, had a value to where they could see it being a daily use currency. Now that's been squashed for the most part. You're not seeing that. You're not seeing that happening, where guys were going to buying a cup of coffee with Bitcoin, and I used to see that all over the place. Now you don't see that. You said it's in city buses, Cali, ATM now in New York. Yeah, I mean, I'm sure a couple places, but when you start getting to places like Mount Pleasant, Texas, when you start getting into places like Little Rock, Arkansas, then give me a call. Give me a call. Because the only places you find it now at its height of popularity is where you find individuals who understand technology and understand that Bitcoin, can be used as a way to take money from people who don't understand technology to people who do understand technology. That's what I see it as now, because that's basically how it's being operated. Where it's basically harvesting money from people who really don't understand it to people who do. To people who do understand computers, who understand, cryptocurrency at another level that a guy who's logging into Coinbase and putting $250 in it because he thinks he's going to get rich in crypto, just doesn't understand. So digital money is the ultimate goal, and digital money is what Visa and MasterCard do very, very well. Visa and MasterCard do digital money very, very well, Rich Million. And they do it at transactions that are 100x Bitcoin. 100x. Even in this rally, what they're not telling you, a lot of these Bitcoin guys, are the transaction levels are lower this time around than they were on the first rally. So you got a shorter amount of players who are buying larger amounts this time around than it was the first time around. And it says a lot when one market, one platform, Coinbase, goes out for an hour or two and you lose, what was that, 11-12% of the value? I mean, how can you make that as a use case for a daily currency? for a currency, when you lose 12% of value because of one platform, how can you use that as a replacement or a safe haven of value when you lose one platform? That tells me right there that this isn't safe, to be placing in funds. This is really an opportunity, where guys who've got it to lose, by all means, man, do what you're going to do. Trade it, invest, lose everything, whatever it is. Because I know the guys who can do that, oh, shit, I'm out 25 G's. Okay. Or you're going to be like that guy from Africa who lost everything in BitConnect. Oh, my God. I lost all my money, man. I lost all my money, $16,000. I lost all my money in BitConnect, man. These motherfuckers, they fucked my money. I just want to go there and I just want to kill them, man, because they took my money. You can't be that guy, man. You don't want to be that guy. Again, taking money from people who don't understand the technology and moving it to people who do. Yeah, that's that African guy on BitConnect. Look up his video up, man. Sitting in his car, crying about how he lost $16,000 in Bitcoin through BitConnect. And some of those scams are coming back. We're seeing some of these crypto scams coming back, and you guys know what they are. They're coming back under different names, but same kind of idea. You get this person, they get that person, and they get the token and all this other shit. Like, we've been through this already. We're back again. So imagine the guy that bought Bitcoin at 20,000. Oh, there are a lot of guys who bought Bitcoin at 20,000 that are still sitting on losses, praying every day and hoping that Bitcoin gets back to them. And it could very well do that. I'll not count it out. I don't understand. I don't know what the future looks like. But what it's looking like now is not very good. And I sent that tweet out. Bitcoin right now, man, it's got to get back above that 25 moving average. It's better get there soon, man, or this could get ugly real fast. It's already tested that 10. It hasn't tested 10,000 yet, but boy, you don't want to even. That's not even a conversation you want to start having right now. That's not even a conversation you want to start having right now, because this could get ugly real fast. You bought Bitcoin at $10. That's what's up. All right. Bitcoin will retrace bear divergence on a weekly. Think about all the people who took out mortgages and bought at the top. Oh, yeah, man. A lot of people lost a lot of money in Bitcoin. A lot of people. But you had guys, again, who thought they were going to be millionaires using BitConnect. And thought it was going to be forever. You had, guys on Twitter, even girls on Twitter. You had this black chick who called herself Bit Beauty. And her comments, her videos are still up. I think she took all her videos with her, but a lot of guys have uploaded some of her videos where guys just stared at her lips and made comments on her videos like, oh my God, I wish you could suck my dick. Because she had these big old dick sucking lips, which I can't deny. She did have some big old dick sucking lips, but she was again another one that suckered people into BitConnect, and a lot of people who did that. Do you think minimum wage should increase? Man, look, at the end of the day, they can raise minimum wage to $20 for all I care. The fact of the matter is the value of the dollar, the money that they're paying you, is going down. So they're going to have to increase the minimum wage because the value of the money they're giving you is losing value, right? It's going down and down and down and down. So it makes raising the minimum wage mandatory. It makes it mandatory. All right. Regardless of what the Republicans want to happen or ultra conservatives, it makes it mandatory when you have a currency that's losing value. Inflation, which isn't high, but still happens, right? It still occurs. So you do have to make up for that by raising the minimum wage that allows people to be able to afford, a decent life, But again, most people don't even get paid minimum wage in America to begin with. Most people do make more than minimum wage, not significantly more, but more than minimum wage. Most companies understand that, if we do pay minimum wage, right, then we probably going to have a workforce that is, unstable, where we have guys who are coming in and out, and we constantly have to, hire and fire, and so companies understand they got to constantly pay more than minimum wage to be able to have a reliable workforce. Yeah. But get a bunch of binary option scams. Yeah, what happened to binary options? The futures markets basically got rid of binary options. I mean, now, especially with this mini that they basically came out with, that basically, crushed binary options for the most part. Yeah, we talked about Beyond Meat. We talked Beyond Meat already. Minimum wage shouldn't go out, shouldn't come down. Well, you can't bring minimum wage down because, again, your currency is losing value. So you can't go down unless we were to go back on the gold standard or something like that, right? When we were on the gold standard, then when you had guys who were making, $2.15 a month or $2.15 an hour, excuse me, all right, where you can still be able to afford an apartment of $2 an hour. That was a thing at one time in this country. All right, go back and see what guys were being able to buy their family when this country was on the gold standard. You could make $20,000 a year and have a home and a car. All right, have a home and a car on $20,000. You definitely can't do that now. I don't think you can even have an apartment on $20,000 a year unless you live in the middle of goddamn nowhere. Stock futures are pumping. Yep, yeah, the futures are up due to the tariff situation right now. China deal coming close. Mark it up. China deal. No tariffs. Mark it up. Even though the tariffs are already on, right? So we're already still losing money. Many companies are already still losing money, but we're going higher. And that's why I love how this show is going to be seen when this is all over, when this ends terribly, whenever that is in our lifetime. People will be able to come back to this to be able to see how you guys were talking about it and how we were talking about it as individual traders about Amazon at 1,800 and 2,000, and many of these stocks like Beyond Meat and GoPro and all these other crappy stocks that will not be around in 10, 15, or 20 years. All right, so let me wrap up the show here. Get you guys up and out of here. Aspen Aerogels. Don't know anything about this company. NASA. I don't know anything about this company, bro. Bonds selling off. Well, John, you got to understand, the smart money is the smart money for a reason. They understand the short term is bullshit, and many of these companies don't have what it takes to pay them back. So the smart money is the smart money for a reason, man. It's crazy, man. It's crazy. And my only not much regret as much as just like, if only I had $1 billion, because I can list, just the dozens of companies that would truly be in serious trouble in a credit crisis. That have really just over leveraged themselves to the hilt. And again, man, we could be talking like this 2-3 years from now, man. That's a very much a reality. Good night, Adrian T. I appreciate you for watching, man. Really do. I can't tell you how every Monday morning I say, man, maybe I should have bought calls for the week. I'm thinking about that right now, man. But again, I know the G20 meetings tend to sell off, but we'll see what happens tomorrow. But are we going to be higher this time next week? I'd love to know what you guys think. Are we going to be higher this time next week just to end the show? You think within the next 5 years shit might hit the fan? Okay, most economists say within 2. All right, Dems sound crazy right now. Dems aren't going to win. They're not going to win. They're not going to win. Kelly Rob, appreciate you, bro. Yeah, the Democrats aren't going to win. They don't have anybody. The Democrats don't have anybody. Democrats don't have anybody. Trump is he's a 2-term president. People underestimate how much people actually really like the bad guy in movies. Say Sanders. Sanders has a chance, but Sanders does have a chance. I'll give Sanders a chance. Oh man, as a short bias trader, he's the greatest thing. I would sprinkle, my shit in a plate of gumbo if Sanders won. I mean, that'd be the biggest blessing as a short bias trader I could ever ask for, is a Sanders presidency. I mean, that would be just heaven. That would be heaven, man. I mean, give me every sexual transmitted. I mean, that's how great that would. I'd still have a damn smile on my face. You know what I'm saying? That's how great a Sanders presidency. I mean, can you imagine how great that would be for somebody's trading account to have him as president, and all you do is love on puts? Oh my God, man! The next business day, I'm cashing out all my credit cards. I'm cashing out. I'm going to my old man. I'm getting money from him. Like I'm back in the 8th grade, bro. I'm taking every dollar I can get from anybody who can give me $1, and I'm buying all puts on biotech, insurance. I'm taking out leaps on it. God, everything, man. Shit, that'd be the greatest thing, man. I'm getting a hard on just thinking about it, bro. Make me want to fucking blow my load, bro. Seriously. That'd be, whew. Yes, indeed. But again, Trump is, he's an ideology. He is something we've never seen before in politics, and he's one of those people who's got such a strong presence that you're going to see guys who are going to be emulating him and copying him 20, 30 years from now, after he's long gone. I mean, he's 72 years old. So Trump as a person, I think his father lived to an old age. But even when he's gone, whenever that is, you're going to have, again, as I said, you're going to see guys who are implementing, whether it be his hairstyle or the way he talks and his policy issues. You're going to see guys doing that 20, 30 years in the future. Now, it's going to be really interesting to see how they're going to go about doing that, because the demographic environment, particularly in some states, isn't going to be favorable for those kind of policies, and that's why you have the and that's why he's president, right? Because in many towns and they're experiencing that shock of immigration and these immigrants who aren't necessarily, joining and coming together within the community, and they've got some outsiders. So it's going to be interesting to see how that all is going to flow. But he's here to go for now. He's here for now. But I mean, and again, he's not, he's not a conservative. I mean, he's not a conservative. When you talk about his policies, the way he spends money, it's just really funny how people can will bend for ideology, even though it doesn't stand within what they say they stood for. But when it's somebody on your team, all of a sudden it's okay. So it's just funny. They say waiting for prostitution stocks will come on. Well, again, look, 170 million women across the world over the next 35 years are expected to, lose their employment due to automation, and that is why the Democrats, liberals worldwide, really are fighting for the legalization of sex work, because for a lot of women, over the next 30 to 35 years, that'll be really the only way they'll be able to make a living. A lot of people aren't talking about that, but that will really be the only way a lot of women are going to be able to make money, is to sell their ass. And it's really inconvenient to say, and it's really unfortunate to say, but and then again, that gets into that conversation of universal income and all of that stuff, and that's why that's a conversation too. Do you think the market has a bit more gas to push higher? We're moving as we're tapped out, though. That's the thing, man. And I just talked about that. We're moving as if we're tapped out. I mean, just look at the market and how we've been playing. We're moving higher, but the candlesticks are smaller. They're more indecisive. They're more, when we have a nice open, we sell off. I mean, volume is at some of the lowest levels we've seen in the last 2 years. So much indecisive action in the march higher. Look at the lack of conviction as we get to these higher levels here, right? As traders question value. Where can we find value? You got guys who look at Trump tweets in the morning, hoping. I mean, that's how we trade now, on tweets. And again, I know we're gonna look stupid 10 years from now. I know we're gonna look stupid. I know we're gonna look like complete idiots to traders in the future, who are just gonna look at like, oh, these guys are so fucking stupid. Like, how do you buy a stock that trades at 400 PE? Are you dumb? Like, I know that's how they're gonna look at us. I know it. I know that's how they're gonna look at us. So I want guys who are watching this 25 years from now, 30, 40, 50, to know, I know we're going to look like idiots. I know it. I know we're going to look stupid. I know the right thing for us to do is to have a currency that trades on a gold standard, that trades on something with real value. I know the right thing to do is for companies to borrow money at a rate where they can actually legitimately pay it back and still maintain profitability. I know that. Unfortunately, it's not the world I live in. So I just want y'all to know that, though. I always look for 52-week highs in stocks. Don't really care about fundamentals. There we go. Yeah, I mean, look, that's what the market is saying. So go, I mean, I'm all with you, bro. I mean, that's what the market is saying, man. That's what the market is saying. Fuck fundamentals, bro. So you on the right side of the market. Fuck fundamentals. You on the right side of the market. I'm clapping for you over here, man. Fuck fundamentals. Fuck being able to pay for these debts. You know what I'm saying? Fuck that shit, man. We don't make no money over here. We trade at all-time highs. We don't generate any kind of return on investment for our investors. We barely, generate any margin on our products over here, right? We spend more money to acquire a customer than we do on the actual customer when the customer makes a purchase. Yeah, that's what we do around here, baby. Yes, indeed. Yo. I'm with you on that, bro. I mean, look, hey, y'all, that's how you win today. You know what I'm saying? That's how you win today. That's how you win today. Well, Adrian, that's it depends on the industry, man. I mean, technology, 50 to 75, 80, it depends on the industry, man. It depends on the industry, There's no one perfect number. Biotech, tech, PE ratio is not specific. It's actually, I shouldn't even say specific to industry. PE it's also telling you what investors expect in terms of future value of the company. So it's not just specific to industry as well. It's also how traders feel about, the projections of the company being, a valuable part of the society and of that sector, whatever it's in, like what they're doing in Netflix. Netflix still, king of the board, even though you guys don't talk about it anymore because it hasn't been going up and up and up every single day like it used to. Netflix used to be one of the first things out of everybody's mouth on this show, going back to 2017, 2018, but now Netflix hasn't gone anywhere. Nobody brings it up anymore. But, Netflix still has an insane PE. All right. That's another company that burns through cash. All right. So let me get out of here, guys. I'll let you guys go. I'm already into Monday. We got the purchasers manufacturing index number that's coming out. That PMI number is coming out today at 9:45. 9:45. I mean, that right there just tells you this game is so fucking rigged. The number comes out at 9:45. So yeah, they're gonna dump it on you in the morning, and then 9:45 the number. I expect to be possibly maybe, who knows, 49, 48. Again, as I put up the number earlier here. Here's the number again. Here's the PMI numbers again. You see the decline from beneath there, January, to where we are now. Again, above 50 is expansion. Below 50 is basically where the market is getting tighter, right? Where basically production is decreasing. So we should break below 50 tomorrow. If we see a 50, I'm gonna be fucking pissed because that's bullshit. That's complete bullshit. That's more than fucking rigged. If we see a goddamn 50 tomorrow, it should be 49, it should be 48 or something like that. But we'll see. Because these guys will fucking rig this shit. But all right, so we'll see it tomorrow. It's saying 9:45. You see, it's been sometimes 10 sometimes, but 9:45 is where we expect it to be. Delivered to the people. All right. So we'll see what happens there. All right. We'll see what happens there. The number coming out of Asia was already really bad. And again, this is the graphical representation of that PMI number over the last year. And as you can see, it's just gently decline. We are in a recession, man. They're lying to us. But hey, that's not what the market is saying. So stay long, stay strong. Stay long, stay strong. Because I know most of y'all don't really give a fuck. You're going to buy them calls and long. Let me see here. All right. So I appreciate you guys again. Been a great episode. 2 hours and 19 minutes with you guys. Yes, indeed. Shout out to everybody who was in the show tonight, talking about these charts and these tickers. Continuing to run this marathon. And it's going to be a very rewarding one, man. I don't sweat the gains anymore, you know what I mean? Because after a while, if you know you're trading the way you should be trading, if you know you're being diligent with your education, you're being diligent with, pursuing the right setups, and the idea of having a comfortable retirement, having a comfortable life, this has got to be not just an expectation. It's like, okay, this is going to happen, And I've gotten to that point where now it's like, okay. And I appreciate those of you guys who are joining me on this ride, because there's so many people who are just living day to day. I mean, they're just going to work, getting a check, blowing their check, not saving, not doing the things that a trader or an investor does. I mean, to be an investor, to be a trader, you have to be a saver. You have to be disciplined with your money. So the discipline that I've learned in this game too, it falls into every area of your life. Before I came into trading, I never took an hour out or 2 hours to read news, New York Daily News or Wall Street Journal. I never read that shit. Now I'm on that stuff every day. Every day I'm on that. So shout out to the guys who are joining this journey with me. Thank you, NASA. Legendary 8s, I appreciate you. One Mark DC, can't wait for the bear market. That's why we gotta watch the market on a daily basis. Looking for those cracks. Again, there are bear market stocks right now that you can take advantage of. All right, there are tons of stocks out there right now that are in a bear market right now that you can be taking advantage of until that time comes. That's why we can shoot the shit about the end of the world scenario, but at the same time make money, because there are opportunities for you to be buying puts on right now. Three Hooks, appreciate you. Rel, Bigga, KH, appreciate you. Who else? Adrian T, Eban R. Who else was in here, man? Shout out to all the guys who always join me in here. John Sanders, Rich Million. Shout out to all the guys who wrote down some of those military stocks. Again, I'll put them in the description. Check out my links, blackboxstocks.us, equityfeed.com, both of my people who support me, giving me that free access to the software. Blackbox hooking me up with some shares. That was the shit, man. I appreciate that. Victor Pezos, appreciate you, bro. Thank you, man. And we're just gonna grow, man. We're just gonna grow and grow and grow, and trying to be a better trader. Every show, explain better. We're gonna get more detailed, around here. One day this show is gonna be so hard for people to watch. It's gonna be like, God damn, what are these guys talking about? For a lot of people, it's already at that point. For a lot of people, but I'm learning right now in one of my financial management classes for my MBA. I'm only 4 classes away for that shit too. I'm almost done. Modeling. We're learning modeling right now, and I'm playing with Excel and shit. I'm going to start doing that shit on the show once I actually figure out how to do it consistently without looking at the book. But I want to get to a point where I can start showing financial projections. But that time will come, because right now we got guys who in the chat room who say they don't give a fuck about financials. So that's not going to come for now, because I'm not trying to lose the viewers I have now. You know what I'm saying? Because guys already panned me for not talking about OTC tickers anymore. So, trying to get guys who appreciate these larger caps and aren't trying to just gamble every day. So had to kind of, dust my shoulders off and find a group who just was serious about really building wealth, man. I mean, that OTC stuff, it's money, but man, trying to leave a legacy over here. So when you're trying to leave a legacy, it's different, man. You got to talk about different shit. All right. So let me stop the ranting, man. Shout out to, again, I appreciate every single one of you guys, man. If there was one person in here, I'd still do this shit. For real. Really would. I would. Tomorrow's an opportunity. Take advantage of it. All right, don't force trades. Until Wednesday, trade well, everyone. Legendary H, appreciate you, bro. Jay Snaps, everybody in there. 3 hooks, I'm out. Trade well. Appreciate you, Candy K.